Hi, welcome to the Momentum Moves, a weekly video series. Myself, Brijesh Bhatia, here, Senior Researcher and Editor at Equity Master. Thanks to all of you, those who are commenting and liking our videos, and I'm appreciate that most of them are liking our videos and charts. And this video series, the comments which we are receiving is very helpful for us as well to come up with the videos. In case you haven't subscribed to our YouTube channel, do click on subscribe button and do not forget to comment however you like the videos or don't like. Do not forget to comment on the videos. So coming to the Momentum Moves videos. So last week has been a slightly muted week, I would say. The post budget, the rally or the budget week rally with the 9% gain. The following week markets though held the 15,000 levels, trading near the all-time highs, a couple of percent up. But as we in last video also we have commented that the 15,070 15,450 level stands out to be a strong resistance zone for Nifty. And in this week as well, if you look at the updated chart on your screen of the Nifty, so this is Nifty futures chart. And if you look at on the derivatives front, the Nifty spot to futures, the premium has been eroding day by day. Still, even if you look at, we have time to a couple of weeks for expiry, but the premium has been eroding. And if you look at the weekly chart of Nifty futures over here, index has been trading in the rising channel formation since the lows of March, the bigger channel if you look at it. And also if you look at the smaller channel which has connected from the lows of September, both the channel indicates that Nifty is around the resistance zone, and this resistance is between 15,200 15,370. In the last week video we have discussed the Fibonacci levels which is at around 15,460 sub levels, and now the updated charts here indicates that it is the resistance zone between 15,200 15,370. So both the levels are coinciding slightly plus minus half a percent. So we think that next week markets might see some profit bookings into the momentum. And not to forget, the last week, the budget week, which where the sector has strongly outperformed, like banking and PSUs, financials, have seen some profit booking in the current week. Now, the sector rotations have been happening quite frequently. Plus, if you look at the overall sector, they are ranging between -2% to +3%. So, none of the sector has strongly outperformed, taking markets to the higher level. So, it's been slightly dull momentum post budget. Now, we think that if the market resists these levels again, which is 15,200 15,370 zone, with the Feb expiry ending, we are expecting the test of 14,400 14,500 on the downside if these levels are held very strongly. Now, the second chart here we want to discuss is, as we have said that the sectors are overall not performing, and the sector rotation happen very frequently. This is the IT to Nasdaq chart, and if you look at why we are indicating the Nasdaq IT chart over here is because we want to throw some light on Nasdaq as well. If you look at this IT and Nasdaq chart, both move in same momentum. As we are a follower of US markets, when the Nasdaq moves, because it holds 50% of the components which are the IT stocks, and Indian IT indices, which is Nifty IT, goes very strongly with the Nasdaq, though the percentage might vary with the outperformance and underperformance, but overall they too gel and move in the same footsteps. Now, the Nasdaq chart over here this is the weekly chart, and this was the one of the most outperforming indices in 2020, the benchmark indices, because if you remember, I guess in June, this started trading at all-time high, and from the March lows to the all-time high in a quick time. This was the one benchmark, and remember, this is the benchmark indices, not the stocks which is trading at all-time high, but the benchmark indices which is at trading at all-time high, strongly outperforming against the global markets. And most of the indices have followed the footstep of Nasdaq, and now they have catched up. Both are up nearly 100% from the March lows. So every indices, if you look at the globally, even if you look at the Nifty, they are nearly 100% up. So from 7500 we are back to 15,000 levels. The March close were around 7511, back to 15,000 levels. So we have nearly doubled. Similarly was the case with Nasdaq, which was the first one to double on the benchmark indices, and other have followed. Now if you look at the chart over here, the pattern which I have drawn is known as bearish black swan. So basically what is this harmonic? So harmonic are basically calculated based on various Fibonacci numbers, and the confluence of various Fibonacci numbers forms the n number of patterns into harmonic. So there are nearly 15 to 20 patterns into the harmonics, and they formed based on the various Fibonacci levels. So in this Nasdaq on the weekly basis, it has formed the black swan. So basically, the harmonics are in reversal in nature, which means they form at right at the tops or right at the bottoms, or probably if you are looking at a shorter time, they might form between the trend and the trend continuation resumption. But if in this case, it has formed at right of the top, and the reversal zone which we are getting as per the harmonic is around 13,750 to 14,000 levels, 13,967 to be precisely. So slightly shy of 14,000, which is again a key psychological level. Now, as per the pattern, if this range held very strongly and we might see a reversal, we are expecting nearly 10% correction or more than 10% correction into the Nasdaq, which can again put pressure on other global indices, because as most of the the global indices are follower of US markets, and if in case Nasdaq falls, most of the global indices might see a down momentum. So now, if you remember previous chart which you discussed, IT and Nasdaq. So now let's look at the IT chart, what it is indicating. If you look at the IT chart over here, right from March 2020, we have seen a stellar performance. And remember, 2020 IT was the strong performance with gain has nearly 55%. Now right at the top, it has formed the dumpling top candlestick pattern. So what does it? After a strong weekly candle, we have seen a couple of weekly candles which were narrow in range, and the follow up by the bearish candle. The dumpling top candlesticks are generally a sell on rise strategy. So currently index is trading at around 26,300, and if I just look at the highs which were around 27,100 something, so let's take at 27,200. So till 27,200 is not a breach on IT index, we think that it is a sell on rise strategy on through the IT. Even though if you look at the momentum in Infosys, TCS, Tech Mahindra, HCL Tech has slightly cooled off the volatility especially. So we think IT will see a slight profit booking, and if in case Nasdaq reverses, we think that 23,000 to 24,000 on IT index can be on cards, because that's a double whammy for IT index. Nasdaq falling, Nifty following up, and if in case both Nasdaq and Nifty fall, IT has to take a dip. So it could be a double whammy for IT indices in current scenario. So key levels to watch over here is on Nifty 15,200, 15,370, or probably 15,400. On the Nasdaq 13,750, 13,967, extended to 14,000, and IT 27,200. So these are the key levels one should watch for next 1 to 2 weeks, where we think if in case market reverses, there could be a good excellent trade on short side for traders who can look for 14,500, 14,400 levels onto the markets. So signing off. Again, I would request everyone, in case you liked the video, click on the like button, and do not forget to comment whatever you like or don't like. Do comment, and in case you think that we should come up with more and more videos, also you can post into our comments. We'll try to come up. Also do watch our Sensex for investors, which we have covered in Fast Profits Daily on Wednesday, where we have covered a Sensex chart for an investor's point of view. And these basically momentum moves are from a trading point of view, but Sensex we have covered for especially for investing, because most of the subscribers have commented in our video, and considering the comments, we have come up with the video on Sensex. Signing off, Brijesh Bhatia. Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.